Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into explaining what's happening to mortgage rates on a daily basis, whether it might be impacted from economic calendar or headline news or geopolitical. Sometimes it's a combination, and sometimes the market sentiment changes as well. It's sometimes good news is now bad news, and somebody who might be watching this may not understand what's going on here. And well, we try to give you guys those explanations as to what the reason behind certain actions here and why they're doing what they're doing. A little bit about myself is I am a loan officer. I do work with a national lender, so we do loans in all 50 states. So if you're looking to refinance or purchase, we'd love to be able to help you guys out. Reach out. But more than that, we want to be your resource. We want to be able to answer any questions you guys have in regards to stuff like mortgage rates or programs available or different things of that nature. If you guys got questions, please feel free to reach out to us. We are here to assist you guys. A little bit of to move on. Why don't we jump right in? We got the economic calendar today. A little lighter today. We got just MBA gives out their weekly mortgage loan activity report, which kind of lets you know if from one week to the next if mortgage loan applications are rising or going downwards. It doesn't have any weight on the market. We just kind of glance at it a little bit to let us know, okay, looks like things are picking up the purchase side or refinance side or whatnot. But probably the only thing that's really going to have an impact on the market today is this 5-year Treasury note auction that's going to be at 10 o'clock West Coast time, Pacific Standard Time here, which will be about 20 minutes. We'll get a little bit more information on that. But as for the MBA, it looks like both the purchase and the refinance side are down a little bit. As you can see, as rates are rising, we're starting to see a decline in the mortgage loan activity side of things here. Now, what's impacting rates today? Well, and same thing with stocks. Stocks are down as well as the whole Ukraine-Russia scenario here, where Russia had come into certain pro-Russian uh, sections, and of course the concern is that maybe they expand further into Ukraine. So, as of right now, they're only in specific areas which were basically uh, aligned with people who were pro-Russia and wanted to kind of break away, and so they're kind of in those territories. But of course, the rest of the markets are, and of course, the Western countries like U.S. and EU put sanctions on Russia, and we'll have to kind of wait and see if there's any more escalation. So that's what we're kind of waiting on at the moment. Yesterday, we ended up going down. We ended up having a price change for the worse, and we ended up closing down 38 basis points. When we did this, we were probably down around, I think it was around 19 or something like that, or in that range. So we ended up doubling that up. This morning we started up lower. We're down even like 9 basis points over the last few moments. I've noticed this kind of ticking upwards. We're kind of now at zero. We were even up a couple basis points in positive territory. So we'll have to kind of wait and see. But the big, it's kind of gearing up and kind of preparing itself just before, ahead of the 5-year Treasury right now, and we'll see if there's much of an impact. If it's a good turnout, that would be good for us. If people are buying, that means that would help us up. But we do also have competition from corporate bonds out there, and so people are buying corporate bonds. That would, it's all like economics say, supply and demand. And if there's a lot of supply and it's not enough demand, that rates will start climbing again a little bit further. So as of right now, we're unchanged from where we left off yesterday. We didn't really have enough position or movement from yesterday's close to be in a different to really price it any differently, or at least not much differently. Here's here's even the day, so you can see some of the volatility. We're up, and then it went way down, and then we kind of worked our way back upwards a little bit here, and that's the for today. Yields, we're still below the 2% mark, which kind of helps us out. That also kind of helps explain some illiquidity we're seeing here in the markets here in the mortgage MBS here. That we're not, this isn't moving as much. We did move some, but not a lot, and especially dropping 38 basis points, we were still like right around 1.94ish or something like that. Yesterday, for that type of a drop, we didn't really have much movement on the yields, but we MBS overperformed or underperformed basically, and that basically in that case, we're kind of seeing some illiquid liquidity in the markets here. So right now we're just under 198. Looks like we're kind of going up above this technical level, which could add a little bit more pressure to mortgage-backed securities. Thus, of course, that would add more. That would worsen the interest rates as a result as well. So, lastly, we'll touch on the average rate for conforming loan limits. They do have points built into it. So let's go ahead and take a look at the 30 fix, which is now at 4.12, and the 15 is at 3.37. So if you've been following these videos, you've been seeing these going upwards as well. So now, of course, as we mentioned, the 4 years now in the 4% range, and the 15 year is above 3 now. So again, if you guys got questions, please reach out. If you guys like these videos, please help us out and smash that like button and share. We greatly appreciate any assistance. We hope you like these videos, and hopefully see you guys tomorrow. Thanks so much for watching. Bye-bye.